What is a grace period? A grace period is one of the most important and misunderstood features of a credit card. It is a short window of time, typically between the end of your billing cycle and your payment due date, during which you can pay off your full balance without incurring interest. Understanding how this works can save you hundreds or even thousands in unnecessary interest charges. To truly understand a grace period, you need to know how the credit card billing cycle works. A billing cycle is usually around 28 to 31 days long. At the end of this cycle, you receive a credit card statement with a due date. This is when the grace period begins. If you pay your full statement balance before that due date, you don't pay any interest charges on your purchases. This is what makes a grace period so valuable, but if you don't pay in full, your balance carries over and the card issuer starts charging daily interest, calculated using your APR or annual percentage rate. APR is a critical term. It determines how much interest you'll pay when you carry a balance beyond the grace period. And remember, not all transactions qualify for a grace period. Cash advances, for example, usually begin accruing interest immediately with no grace period at all. Let's break down some other important terms. Your minimum payment is the smallest amount you can pay to stay in good standing. However, paying only the minimum means you lose your grace period and start paying interest on the rest of your balance. This is how many people fall into the trap of credit card debt. To avoid losing your grace period, always aim to pay your full balance each month. This not only helps you avoid interest, but also improves your credit utilization ratio, which is a major factor in determining your credit score. A good credit score can help you qualify for lower interest rates, better loan terms, and higher credit limits. It can even impact your approval odds for mortgages, auto loans, and business credit cards. Some credit cards offer 0% introductory APR for a set period. During that time, you don't pay interest, even without a grace period. But once the promo ends, the standard APR kicks in, and grace period rules apply again. It is important to note that missing a payment may lead to late payment fees, and could even trigger a penalty APR, which is a higher interest rate applied after a missed or late payment. This not only adds cost, but can damage your credit profile. Let's talk about balance transfers. If you move debt from a high-interest card to one with a 0% APR offer, you can buy time to pay it off interest-free. But most balance transfers come with a balance transfer fee, and some don't offer a grace period on new purchases unless the full transferred balance is paid. Another trap to avoid is the cash advance. Unlike regular purchases, cash advances typically have no grace period and come with higher APRs and cash advance fees. It's a costly option, so use it only in emergencies. When managing your credit, you should also monitor your credit report regularly. This helps you track changes to your FICO score, identify errors, and spot any signs of identity theft. Many credit card companies offer free credit monitoring tools and alerts. Understanding your grace period also helps you get more out of your rewards credit cards, whether it's cashback, travel points, or airline miles. Using your card responsibly, i.e., paying it off in full each month, lets you earn rewards without paying interest. For those with poor or limited credit history, a secured credit card can help. These require a deposit, but often come with full grace periods, giving you a chance to rebuild your score while learning responsible habits. Most modern cards support mobile wallet payments like Apple Pay or Google Pay, which offer convenience and security. But regardless of how you pay, the billing and grace period rules still apply. Your card's terms and conditions will outline exactly how long your grace period lasts. Most are between 21 to 25 days, but this can vary. Cards with longer grace periods can provide more flexibility, especially when used strategically for large purchases. There is also a benefit to using credit cards that offer no annual fees and no foreign transaction fees. especially for frequent travelers. Just be sure to understand when the grace period applies if you're making international purchases. Always read your cardholder agreement, where grace period rules are legally outlined. Missing the fine print could lead to unexpected interest charges, even if you thought you paid on time. If you're using multiple cards, keep a payment calendar to track due dates. Paying late not only costs you money, but may eliminate your grace period going forward. And once it's gone, it's hard to get it back unless you pay off the balance completely and start fresh. Some credit cards offer a flexible payment schedule or allow you to choose your due date. This can help ensure you always pay on time and take full advantage of your grace period. To avoid losing your grace period, try automating your full payments. Most banks and card issuers offer auto-pay features that deduct the full balance before the due date. If you have trouble remembering, set payment reminders or use a budgeting app that syncs with your accounts. These tools help you stay on top of your finances and maintain your grace period. Credit card issuers want to make money through interest and fees, so it's up to you to outsmart the system by maximizing your grace period. This is one of the best ways to build long-term financial health without giving money away in interest. In summary, the grace period is your best friend when it comes to avoiding interest and staying in control of your finances. By understanding how it works and combining it with smart payment strategies, you can save money, build credit, and even earn rewards at the same time. If you found this helpful, don't forget to subscribe to the channel for more simple explanations about credit, personal finance, investing, and debt management.